Hello everybody, welcome back to our channel, where we break down the biggest trends shaping our world. Today let's dive into artificial intelligence, AI, and explore why it's not just the hottest topic in tech and investing, but also a force that's rapidly changing the way we live and work. AI is everywhere, from the apps on your phone to the systems running global businesses. It's transforming industries, automating tasks, and creating massive opportunities for those who know where to look. This boom is like a modern-day gold rush. But just like in the old days, the real winners aren't always the miners. They're the ones selling the shovels. In today's world, those shovels are the powerful software tools that make AI possible. Enter Palantir Technologies, a company that's become a key player in this new era. Palantir builds advanced software that helps organizations, governments, corporations, and more make sense of enormous amounts of data. Their technology turns raw information into actionable insights, giving users a competitive edge. Their platforms, Gotham and Foundry, act like super smart detectives. They sift through mountains of data, find hidden patterns, and help leaders make critical, data-driven decisions faster than ever before. Palantir's roots run deep in government and intelligence work, which has given it a reputation for secrecy, power, and solving some of the world's toughest problems. But Palantir isn't just about government contracts anymore. Now it's expanding into commercial sectors like finance, healthcare, and manufacturing, helping banks fight fraud, doctors improve patient care, and factories run more efficiently. As AI adoption accelerates across the globe, the demand for platforms like Palantir's is exploding. Companies everywhere are racing to harness the power of data and AI to stay ahead. Palantir is right at the center of this innovation wave, shaping the future of how organizations operate and compete. But remember, the stock market is unpredictable, especially when it comes to AI stocks. They can soar to new heights one day and tumble the next, driven by hype, news, or investor sentiment. When a high-flying stock suddenly drops, it's easy to panic and want to sell. But that's not always the smartest move. For savvy investors, a price drop in a fundamentally strong company can be a signal to pay closer attention, not to run away. It might even be an opportunity. That's exactly what just happened with Palantir. The company's stock took a hit, but its long-term story remains compelling. And one of Wall Street's biggest names took notice, signaling that Palantir's journey in the AI gold rush is far from over. If Palantir is so important in AI, why did its stock just drop? Stocks fall for many reasons, sometimes real problems, sometimes just market mood. In Palantir's case, a mix of factors created a perfect storm. The tech sector, especially AI stocks, had soared. Then investors got nervous about high prices and started selling to lock in gains. This triggered more selling, driving the price down. The initial AI frenzy cooled, and the market started demanding real results: earnings, contracts, growth. Even strong companies like Palantir faced scrutiny if growth wasn't explosive enough. Short-term issues, like delayed contracts or longer sales cycles, added to the anxiety. Morgan Stanley acknowledged these temporary headwinds. But these aren't signs of a broken company, just a nervous market reacting to short-term bumps. That's what caused Palantir's recent pullback. Amid the fear and selling, Morgan Stanley made a bold move. On November 14, 2025, while others were selling, they upgraded Palantir's stock. An upgrade from equal weight to overweight means they now believe Palantir will outperform the market. That's a strong buy signal from a major Wall Street player. They also set a new price target, $200 per share, a big jump from current levels. This wasn't a cautious move. It was a declaration of confidence in Palantir's future. Morgan Stanley's opinion carries weight with big institutional investors. Their upgrade goes against the prevailing fear, suggesting the market has overreacted. They see opportunity where others see risk. When a respected bank makes a contrarian call, smart investors pay attention. It's a sign that the recent panic may have created a rare buying window. Morgan Stanley is betting on Palantir's long-term potential. Should you? The phrase buying opportunity gets thrown around a lot in the world of investing. But what does it really mean? And why do so many experts pay attention to it? It's not just about a stock dropping in price or seeing red numbers on a screen. A falling price alone doesn't automatically make something a bargain. A true buying opportunity is when a fundamentally strong company's stock falls for reasons that are temporary, emotional, or based on market overreactions. Not because the business itself is broken or its future is in doubt. Think of it like a great house in a fantastic neighborhood, suddenly selling at a discount because of a short-term issue. Maybe a noisy construction project next door, or a brief market downturn. The value of the house is still there. The price just doesn't reflect it right now. Smart buyers recognize this gap and act before the crowd catches on. That's exactly what Morgan Stanley sees with Palantir at this moment. Palantir's fundamentals, its cutting-edge technology, long-term government and commercial contracts, and its strong position in the rapidly growing field of artificial intelligence, remain robust. Yet the stock price has been pushed down by short-term fear, profit-taking, and market volatility, rather than any real weakness in the company itself. Morgan Stanley calls this a favorable risk-reward profile, meaning the potential rewards of buying now outweigh the risks. At this lower price, the upside potential is much greater, while the downside risk is limited. An ideal setup for investors looking for value. A compelling entry point is when the odds are in your favor, because the market has overreacted, creating a window of opportunity. The key is to separate the stock price from the company's true value, and not let short-term noise cloud your judgment. When the price falls below the company's real value, that's when a genuine buying opportunity appears. And according to Morgan Stanley, that's exactly what's on the table with Palantir right now. A rare chance to buy a strong company at a discount. Why is Morgan Stanley so confident? Their research shows AI and data analytics spending is booming and accelerating. Palantir is positioned to capture a big share, thanks to its experience with demanding government clients. Now, it's leveraging that expertise to win over big businesses needing robust AI platforms. The recent stock pullback made Palantir's valuation more reasonable. At this lower price, the risk is lower, and the potential reward is higher. Morgan Stanley is focused on the long-term years, not months. They believe Palantir's foundational role in AI will only grow. Their upgrade is a vote of confidence in that vision. What makes Palantir a true AI leader? It's all about the moat, those hard-to-replicate advantages. Palantir's technology is battle-tested, powering critical decisions for nearly 2 decades. Its platforms, Gotham and Foundry, integrate messy data into a single, actionable view, something few can do. Once a company adopts Foundry, switching is tough and costly, creating loyal, long-term customers. Palantir's government relationships and security clearances are major barriers for competitors. Its AI platform lets clients use cutting-edge models securely on their own data. Many companies won't risk sending sensitive data to third parties. Palantir solves that. This combination of security, integration, and high switching costs makes Palantir's moat real. That's why Morgan Stanley calls it a leader, not just another player. Let's be clear, every investment comes with its own set of risks, and Palantir is certainly no exception. Before you put your money on the line, it's crucial to understand what you're really signing up for. First, let's talk about valuation. Even after the recent drop, Palantir's stock still isn't what most would call cheap. The company's price reflects a lot of optimism about its future, and that means there's less margin for error. High expectations are already baked into the price. Investors are betting on Palantir to deliver rapid growth and big wins, quarter after quarter. If the company's growth slows down, or if it misses its ambitious targets, the stock could take a serious hit. The market can be unforgiving when reality doesn't match the hype. Volatility is simply part of the deal here. Palantir's stock price can swing wildly in both directions. This isn't an investment for the faint of heart, or those who lose sleep over daily price changes. Another thing to consider, government contracts. They're a big part of Palantir's business, but they tend to be lumpy, meaning revenue can jump or drop significantly from one quarter to the next, making it hard to predict steady growth. Shifts in government spending priorities or changes in political leadership could impact Palantir's ability to win new deals or renew existing ones. This adds another layer of uncertainty. Competition is fierce. Giants like Microsoft and Amazon are in the game, and there are also nimble startups constantly innovating. The landscape is crowded and always evolving. Palantir's moat is strong thanks to its technology and relationships, but it must keep pushing the envelope to stay ahead of rivals. Standing still isn't an option in this industry. Falling behind in artificial intelligence or data analytics could quickly erode Palantir's competitive edge, especially as new breakthroughs emerge. These are real, tangible risks you must weigh carefully before investing. It's not just about the potential rewards. Understanding the pitfalls is just as important. Don't get swept up in the hype or excitement. Take a step back and make sure you know exactly what you're getting into before you commit your hard-earned money. Smart investing means looking at both the upside and the downside, weighing the risks and rewards with a clear head. Ultimately, make sure you're comfortable with the ride, because investing in Palantir can be a bumpy journey. So why is Morgan Stanley willing to make a bold call? Because they're thinking long-term. Palantir's story is about the next decade, not the next quarter. Data is the new oil, AI the new electricity. Every industry will run on it. Palantir isn't just selling software, it's building the operating system for the modern enterprise. The commercial market is massive and still early for Palantir. As more companies adopt Foundry, the platform becomes even more indispensable. Palantir is now showing real profitability, proving its business model works. There will be volatility and scary headlines, but the long-term thesis is strong. If you believe in Palantir's vision, buying during fear and holding could pay off. That's the bet Morgan Stanley is making. So, what does this mean for you? Only you can decide if Palantir fits your goals and risk tolerance. Morgan Stanley sees the sell-off as an opportunity, not a warning sign. Their $200 price target signals big upside potential. But don't just follow Wall Street. Do your own research. Understand both the bull and bear cases. If you invest, have a plan. Don't use money you'll need soon, and consider starting small. Dollar cost averaging can help manage risk. Watch Palantir's growth and profitability over time. The road will be bumpy, but informed, patient investors give themselves the best shot at success. The future of AI is unfolding. Will you be part of it?